Hey everyone, welcome to the program. I'm Jeremy Szafron. Thanks again for joining us today. On today's show, we're taking a close look at the gold market. This December, gold prices hit a record high of about $2,135 US on December 4th. And since then, the prices come down. Gold spot prices rallied, though, to about $20.20 US as the Fed pivoted towards rate cuts in 2024. Now, this has marked a significant turn for gold in the year that's seen its fair share of ups and downs. We'll also discuss the larger economic forces at play. As I mentioned, we just had the Fed's last meeting of the year. The interest rate remains untouched at 5.25%, 5.5%, and they signaled 3 cuts in 2024. Now, the dot plot showing 75 basis points worth of rate cuts next year. Jerome Powell sounding quite dovish, not quite a victory lap, but dovish. And the markets are loving it. The Dow soared more than 400 points to surpass 37,000 for the first time. And we'll get an expert forecast for the precious metals market looking into 2024. It's a crucial time for gold. And of course, we're here to break down all the key factors and to help us navigate these topics and more. We're joined by Randy Smallwood, CEO of Wheaton Precious Metals. Thanks, sir. Thanks for coming on to the show.
Hey, pleasure to be here, Jeremy. Thank you.
And our first guest in studio in Vancouver, which we're excited about.
I'm honored.
Thank you, sir. Yes. As you just heard me in the intro now, it's been an interesting time. The Fed coming out saying, okay, we're going to pause these interest rates and possibly go forward with 75 points being cut next year. I'm curious, when we think about the Fed and something that you no doubt pay attention to, let's comment on this. What are your thoughts on the announcements?
Well, I think it's pretty clear that they've hit their peak. They can't afford to go any higher. And when you sit and look at how levered up, how much debt there is in the world, the cost is just too high. And so we know there's good pressure for them to start moving back down. And I think it's just a question of when it's going to happen next year, how quick, and then, of course, how much. I'd be happy at 75 basis points down next year. I think it bodes well, very well for the price of gold. Yeah,
no kidding. And it has been so far. I mean, obviously, we just mentioned that we had that price surge of gold sit up to about $21.30 at the beginning of December. You're obviously running one of the large companies in this space. Tell me a little bit about what that means and what the surge did. Also, how did we get there?
Well, it puts us in a really good position just with the amount of growth that we have at Wheaton on a go-forward basis. We have 50% growth over the next 5 years, and it sounds like our timing is very good to have this growth and build on. It's a great time to be investing into the space. We see record prices in gold, and yet it doesn't feel like a bullish market. It still feels like a bearish market. It still feels like there's lots of strength up. And I just really think that all the factors are pointing towards a good, sustained strength in the gold market.
Yeah, I know that Wheaton Precious Metals has its own internal modeling. Give us some insight into that. What does it look like going forward? I mean, you were talking before, the retail market hasn't really come out yet and started buying these shares. So if we look towards the price of gold and we start looking at the values of share prices, including the ETFs, GDX, GDXJ, not really moving significantly. I mean, are we undervalued in the market?
Well, at Wheaton, I'm very bullish on gold prices, but I don't risk my shareholders' capital on that. We'll invest based on the spot price of the day, and that's how we build on a go-forward basis, is a reasonable return based on that spot price. And that's how I deliver that upside to our shareholders, is that when we see that upside in precious metal prices, that does get returned back in terms of stronger returns at the assets that we've invested into. And so we don't, I hate to say it, we don't spend a lot of time trying to forecast gold prices on a go-forward basis. Our whole focus, our primary focus, is assessing risk in terms of the quality of the investments that we're going into. And I think that's one of the key things is to spend a lot trying to forecast gold prices. I've been in this business for well over 30 years now. I still can't tell you what the price of gold is going to be tomorrow.
Yeah.
Much less a year from now, 5 years from now, 20 years from now. Oh. What I am confident in is going up, but to risk my shareholders' capital in that belief, that's not our business model.
Yeah, it's interesting. I mean, you've obviously been paying close attention to the Fed, what they've been up to this past year. Mm-hmm. When they start to pause in, say, the summer, for instance, what do you then look towards in the company? Do you say, okay, gold prices are going to go, this we'll get into, more opportunity for some price evaluations, but where do you think that we're going in terms of this next 6 months, for instance?
Well, I think the expectations that we're going to see rate cuts coming is going to bode well. We have already seen that reaction right now in terms of the response from Jerome Powell's comments. Mm-hmm. But here's the real driving force behind gold prices right now is the fact that so many central banks around the world are getting uncomfortable with their U.S. dollar reserves and starting to swap out that U.S. dollar for gold to back up. What they've realized is that the U.S. dollar is a political animal. It's got political risk attached to it. And so any sovereign bank, any central bank out there has now identified the fact that there's an elevated portion of risk associated to any US dollar reserves that they have backing up their own sovereign currencies. And that swap isn't going to change. That swap is going to, in fact, I think it's probably going to get stronger and stronger as people start realizing how challenging, the U.S. dollar is in terms of the debt loads that we see and how much fiscal mismanagement there is around the world. And so I think that's, again, I'm just really excited about the next 4 or 5 years. I think we've got such a strong vector in precious metals. Gold is the strongest of the precious metals right now. And that combined with our growth, most excited I've been in a long time.
Yeah, as we talk about gold, it's we have to talk about silver. I mean, it's always kind of been the underdog of the market. The volatility's there. I think the current price is sitting around $23, somewhere in there.
Plus or minus.
Plus or minus, as they do.
Yeah.
Where's silver going to be going here? I know you're a big fan of this metal.
I am, yeah. I just finished 3 years as the chair of the World Gold Council, and here I am I think silver is the best opportunity out there. The challenge with silver is that most silver is produced as a byproduct. And so silver has much higher beta because the supply side doesn't react to demand changes very rapidly. And what we see with silver is we've seen peak production back in 2017, 2018. We've seen declining production worldwide ever since then. But at the same time, increasing industrial demand, where now 65% of silver is now consumed by high efficiency electronics, antibacterial applications, solar panels, etc. All the way through. Silver conducts electricity better than anything else. And so that the push towards green, the push towards less waste, more efficiency means more silver will be used. And we're seeing that continued growth. You can't have industrial demand going like this and supply going like this if you ever wake up the retail side, and the retail side will follow. And again, I think a lot of the strength in the gold space right now is coming from central bank purchases. We're not seeing that retail space. All you have to do is look at the ETFs and the equities, and they're not doing very well, even though we've got record gold prices. So it tells me that it's central bank purchases buying raw bullion that are supporting the commodity price, but not, nothing else is getting that ride. When that aspect wakes up, when the retail side comes back in, when the investors come back into the gold space, which I don't think is too far off, as soon as they start seeing exactly what the central banks are seeing right now, silver will follow. And when silver always follows gold, but it always outperforms gold. And so I would say that, in terms of upside, that's what happens with higher beta, is you'll see a higher response on the silver side. Of course, beta goes in both directions, but I do see in the near term here some real upside in silver. And silver should be trading, the gold-silver ratio is as high as it's ever been. And I just don't know how sustainable that is long term. So as soon as you start seeing investors come back into the gold space in a big way, which I do think is not too far off, silver won't be too far behind that.
Yeah, it's interesting. You talk about this green revolution. COP just wrapped up, and we saw in Dubai talk about, obviously the revolution is just gearing up. And these metals, such as cobalt, which I know that Wheaton Precious Metals holds, we're going to start seeing people shift towards these, and obviously the demand going up. So when will the retail wake up and start looking towards this space?
Well, that's a tough one because in my eyes, it should have happened 6 months ago. Should have happened a year ago. Should have happened when we've got some pretty strong, geopolitical, regional political challenges and wars going on around the world and such. I just truly think that what we're going to see is a gradual weakening in terms of the confidence of the fiat currencies around the world, and there's just a good, strong, consistent messaging that we need a bit more gold in this world as a sure, constant store and measure of value.
Yeah.
So that's going to come.
We talk about the East versus West. There's some talk about this new Cold War that's happening when it comes to gold and precious metals. I'm curious, has that been keeping investors away from the space? They're trying to see where this settles, or is this going to ignite more people to come towards it?
I actually think that that's one of the beauties of gold, is that its value is recognized everywhere. And so it doesn't have to be aligned with any political organization because it's transparent. It travels through all cultures. It's got respect all over. I always like to highlight the fact that, people sometimes wonder about what gold supplies to society. The only people that ever ask that question are people in Western Europe and people in North America. Everywhere else in the world, which is like 80% of the world's population outside of those regions, all understand what gold's purpose is in terms of a solid store of value that withstands challenged environments, right? And so, I see that continued strength all the way through.
With the look of stabilization, like the Fed just announcing that we're going to maintain, rates, it looks like we're going to have a little bit of a soft landing here. Some saying March, we could see the rates come off. Some saying summer, we might start seeing some policy changes. I'm curious, so has the policy affected the metal space in terms of that, that hedge against people want to get into? Has any of this policy changed people's perspective?
Well, there's no doubt that getting higher rates and dropping money in and getting 4, 5, 6% paid on cash being stored might have some appeal. It's just a matter of how long will you be able to do that, right? And so the rates climbing up, it's an interesting environment because this is usually the point where you wouldn't expect to see gold at record levels compared to everything else, but because of concerns on the geopolitical side, as I said, central bank purchasing and stuff like that, we're seeing strength in gold and strength in the rates. Boy, if you start turning the vector in a direction which is going to happen, it's just a matter of timing. But that strength is just going to pile into gold, right? You'll just see that wrap back, and so I personally think we're setting ourselves up for a perfect storm in terms of that.
Now, investors are looking for guidance here when it comes to macroeconomics, and you start to look at that macro picture out there. What are you looking for in terms of what will navigate this commodity cycle into 2024? What kind of geopolitical stunts, if you will, or the things happening on in the world, what are you looking for that'll change that?
Again, so tough to predict, and would I ever want to risk my shareholders' capital on that? So the whole objective, and Wheaton has always had this mandate, is that we really try and minimize our own political risk exposure.
Right.
And so not only do we select countries that we're comfortable in, but we also structure our contracts so that we have multi-layer guarantees, parent guarantees, asset level security, operating entity security, multi-level guarantees to protect our shareholders, because even within those countries, we don't control the political risk. It's always going to be the operator versus, and in terms of dealing with the government agencies and the regulators and such like that, and the communities around them, it's the operator's role to do that, and that's what the operators are supposed to focus on. So we don't incorporate that risk into our streams. And so I hate to say it, it's a bit of a crazy world out there. I don't spend a lot of time trying to predict where. I was astounded that Russia invaded Ukraine. I still am surprised that, at that approach, stuff like that. I just don't spend a lot of time trying to predict that kind of stuff. I've got much better things to focus on.
Totally. I'm curious about those much bigger things, though, because I know that you're a huge fan of cryptocurrency, right? I want to get into this a little bit as, obviously gold has been used as a hedge. People are looking towards digital currencies, Bitcoin. Spot ETFs are sitting with the SEC right now to get approved. What are consumers and investor sentiment towards gold still? Safe haven, even in this new cryptocurrency kind of world?
Well, it's, and I wouldn't call it a cryptocurrency kind of world. Crypto is one aspect, one creation, and there's definitely some lessons to be learned in terms of digitalization and how you can actually move stuff around instantly. One of the legacy things that I've left, and it's still in process, but the World Gold Council is pushing forward a Gold 247 initiative, 24 hours a day, 7 days a week. And it's really digitalizing how you can own gold and make it instantly accessible through use of blockchain, having integrity databases where you actually have gold sitting in a vault with a physical address and provenance behind it, linked to digital tokens that are freely and quickly and instantly tradable, fungible, have good trust levels, and so on. And so, to be honest, gold ownership really hasn't changed. I mean, the last sort of change to gold ownership was the creation of the ETFs back about 20 years ago. Really what we're doing is digitalizing the ETFs to come up with our own digital token that is backed by gold. And so, one of the complaints that I think has probably given the crypto space a little bit of capacity is that gold is difficult to own. It is. It's tough to carry around physical. There's cost to owning it physically and storing it in a secure place. But if you can take that and swap that into a digitalized environment where you have mass vaults that have physical addresses with guaranteed provenance behind these bars on a go-forward basis, and replicate those bars with digital tokens that have direct, fractionable, fungible correlations back. So each token is backed one by gold. Why would you want Bitcoin?
Right. Well,
why would you want anything that has nothing behind it?
One could say the same for the Bitcoin, right? With the ETF being possibly approved here, I don't know, come New Year, there's different projections kind of out there. Yeah. That should legitimize that space. Are you worried about some of those shareholders, or not shareholders, but the gold bugs out there holding big parts of gold, maybe coming into that space a little bit more with some credibility?
It's such a volatile space. To me, Bitcoin is the other end of the spectrum. It's the high beta, it's the high risk space, the whole crypto space. And the other concern I'd have, and it's interesting, where do you think, is Bitcoin going to be the flavor of the day 10 years from now in the crypto space? Like, digital entities have their time in the sun, right, and then they disappear off into the sunset, and the next digital entity comes along, because they can all be copied. There's only one gold for thousands of years. And so gold, again, going back to the discussion, gold is accepted in every culture around the world. Every community, every country around the world understands and respects the value of gold. I don't know if you can say the same for the crypto space. And it's the longevity, right? I don't think anyone, even in the crypto space, would take crypto and drop it underneath their pillow for, or bury it in their backyard for 10 years and have confidence in it having value 10 years from now.
Yeah.
Because Bitcoin number 2 will come along. Maybe it's Ether, maybe it's, who knows what it is. But and so the fact that it's being copied is the biggest weakness behind it. There's nothing of substance behind it, so it can be physically copied. Anyone comes up with the next algorithm that creates the next structure, and it just, that's the biggest weakness on that side.
Yeah, and I mean, it's a fast-pacing world. Obviously, we've seen what's taking place in Argentina right now with their currency. Outside of that, we have China buying a lot of gold. We're seeing them come into the market. I'm curious, and again, because investors are always looking for guidance, is 2024 the year of gold?
Well, I think 2023 has been a pretty good year.
Yes.
I think we're going to have a couple of successive years of gold coming down the pipe. All the vectors are pointing towards this. You see this outside of the United States. There's a real concern about the strength of the U.S. dollar and the fact that it can be used as a political instrument. And that is only going to reinforce this movement back towards gold. We've seen the BRICS nations come out and say, maybe it's time for a gold-backed currency to come into place, right? The initiative that we're pushing at the World Gold Council, which is the digital trade of commodities. But if you can digitalize in the way you trade gold so that it's instant settlement with very low fees or transaction costs associated to it, it all of a sudden looks a lot like a gold-backed currency. Yeah. And I tell you, with 200 trillion in assets under management around the world, looking for places to sort of, gold is such a small part of that right now. All it takes is a bit of that to shift into the gold space, and you could see a rapid change in how gold prices are. The demand increase would be substantive. And so that is overlaid on top of the existing environment in gold, where all the vectors are pointing to stronger and stronger support for gold. And then you have this upside potential of us bringing gold into the 21st century in terms of how you own it.
Yeah.
The systems are there, the technology is there, and the infrastructure is there. And so it's only a matter of time until it gets that widely accepted, or gets presented.
You mentioned that you wrapped up over at the World Gold Council, but I'm curious because you're still very much involved in these discussions. I mean, you were just meeting with them, as you mentioned, yesterday. Talk to me a little bit about the inside of those rooms without giving too much away. What are you hearing? What kind of conversations are these leaders having about gold over the next 24 months?
Well, it's an incredible organization because it created the original gold ETFs, the GLD and the GLDM, back in 2001, 2002. And for that, this is an advocacy group that is incredibly well funded. We still own those 2 ETFs. And so the fees that we make off those ETFs are what's funding us going forward. And in fact, as the World Gold Council goes, 99% of our funding comes from the ETF. Only about 1% comes from members' dues. But it is an incredible organization in the sense that over 60% of the world's gold production is represented on the board. And as a producer, as long as you're producing more than 100,000 ounces a year, you qualify for membership at the World Gold Council. And so what you've got is an advocacy group that has capacity. And that's, I think, probably the biggest change is that 4 years ago when I first stepped up as chair, we also had a new CEO there. And we stepped back, the combination of a new CEO and a new chair, we stepped back and said, where do we need to go? Where do we, what's the next step for gold? And this is well underway. And so hopefully, as I said, this is one of the objectives, is to try and bring gold to the forefront of the digital world in terms of being able to readily trade gold instantly And we're probably about a year off of having this. And our focus, we've been putting a lot of effort into working with all the bullion banks and the institutions, the regulators, and we've got good, strong support. And we have this working group, we jokingly call it the G20 for the Gold 20.
Right.
But it's a working group of about 20 different members. It's the JP Morgans, the HSBCs, the ICBCs. It's the full suite of bullion banks and traders and regulators that are working our way towards this. And it will get there. I mean, the technology is there. It's just a matter of having a good gatekeeping service, sponsorship service, in terms of being able to push this forward.
Is that what's holding you? Is that what's holding you back now? You mentioned about a year out.
No, you bring out 20 different people and trying to get them to all decide. It's going to take time to get these institutions on side, but it's worth the effort to make sure that we get it embraced at the institutional level. Once that happens, I'd see it spilling into the retail space, but we need it to work at the institutional level for it to ever get any serious traction.
Yeah. You talk about those high levels back in December. Where do you see this breaking out next? I mean, everyone was back excited on December 4th. What's going to be the next indicator, and where's gold going to go? When's the next breakthrough?
I think you're going to see continued upward pressure on this. And so, you're going to see short-term volatility, but in reality, when you go back and look at it, just burrow your eyes a bit and look back at the last 20 years, we've seen a continual vector up for gold, with obviously some volatility around 2008, 2013, 2019, etc. But boy, it's hard to ignore that continuous trajectory up. And so I'm sure there's probably a few other geopolitical events that are going to surprise us over the next while. Yeah. But what those are, I'm not going to be able to predict at those. It is getting tougher and tougher to build and operate mines in this world. And we've seen lots of examples of that just even recently in the last couple of months. And that impacts the supply side. And so again, it's even adding pressure on the supply side in terms of trying to satisfy the demand that we have. And so, it's just, I'm pretty excited about where we're going.
Good. You operate a lot of Canada, obviously. I'm curious about the regulations here and the oversight in the mining community. Where are we at with this? Where are we going to be going forward, considering maybe an election upcoming? Where do you think we're going to land with mining in Canada?
Well, I do think that there's a bit of a movement towards recognizing the fact that we're a resource-rich country, and on top of that, we've got some of the highest, if not the highest, environmental and social standards and regulations and requirements that are demanded of anyone in the resource industry. So, what I think we should really focus on in Canada is responsible resource development, and be the best that we can at it, and lead by example from that front. And we've got incredible opportunity, and I would say in certain jurisdictions in Canada, there's a really strong momentum towards that. One of the challenges, though, is making sure that you have good, strong, consistent community support all the way across. And it's challenging when one person can stop an entire project, one squeaky wheel. To get to 100% consent on anything, it's very tough from an infrastructure perspective. As an industry, as a society, every time we're building something, every time we're pushing something forward, we should always be doing it with the cause of the greater good in terms of that. And so we just have an opportunity in Canada to be leaders in this space. We've got the resource base in Canada to be leaders in this space. We need some leadership to be leaders in this space. We need some strong political leadership to provide that support and push through and have that faith, even though you may get critiqued and the squeaky wheel quite often represents a very loud minority. But sometimes you have to see your way through that to understand that the cause of the greater good. So that's one of the challenges, and it's not really just a Canadian challenge; it's a challenge around the world. But I think I've seen definitely some good positive developments here in Canada, and some stronger words. I don't know if I've seen actions yet, but stronger words from the government in terms of supporting the industry. And so I'm bullish that we are going to see continued improvement here. I like Canada, obviously, being Canadian, a Canadian company, and I'm proud of our heritage here. Not only just Canada, but here in Vancouver. It's what we've been able to deliver to the resource industry around the world in terms of helping source risk capital to build good, profitable companies, good, profitable assets that that not only profit shareholders, but also profit all the other stakeholders. It's something that I think is very, very important in terms of, and we should be proud of what we've been able to deliver. So,
as prices go higher, you'd expect margins to remain a little bit higher as well. Is 2024 the year for mergers and acquisitions? Are we going to see some type of a consolidation on some of the juniors, or do you think it's still going to be a tough regulated space?
Well, it's tough to not imagine a lot of juniors with the way they're trading right now in terms of the discounts to net asset value that a lot of them are trading at. I'm a bit astounded that there hasn't been more acquisitions from some of the mid-tier companies down to the juniors, or even the seniors down to the mid-tiers. The way the markets are trading right now, there's some good value out there. And so, I have no doubt that will move forward. I think what people are waiting for is a bit more strength. I think everyone's been a bit surprised copper's been as weak, but we've had a couple of things over the last couple of months that have all of a sudden provided a bit of support for copper.
Right.
But seeing copper underneath $4 when you look at the forward projections in terms of copper demand, nobody's making investment decisions in the copper space yet. But you start seeing some strength in copper, and I think you'll start seeing some more mergers and acquisitions in this space. There's no doubt that's coming down the pipe. And until you start seeing some good, strong strength in the equities, they're looking pretty attractive.
Yeah, I mentioned COP before over in Dubai, and they were talking about this transition towards the green space. And when that happens, obviously you need some precious metals that go within that as well. So I'm curious, how do you position Wheaton Precious Metals going forward as you see supply and demand kind of diminish on those green metal sides? Are you going to be looking for more opportunities there?
Well, keep in mind that more than half of our production, we're a precious metals company, but more than half of our production comes from copper mines. We already, in fact, 3/4 of our production comes from base metal mines, and we're getting the non-core precious metals byproduct from them. So our company is already funding and financing the critical mineral space, right. the copper, the lead, zinc space. And I would argue that silver deserves to be a critical mineral. In fact, I think it's probably, by virtue of its functions, I think it just high efficiency electronics. If you want batteries to last longer, if you want more processing power, you involve silver. The more silver you have, the less energy you waste. And so, I think we're already pretty well positioned in that space. I will say that, the bulk of what we're looking at right now for new opportunities tends to be more precious metals projects, just because, as I said earlier on, until we see a bit more confidence in long-term copper prices, I'm not sure that we're going to see people aren't committing to build new projects in the base metal space. They want to see a bit more strength and a bit more confidence in terms of the longer term outlook in the base metal space before they'll commit to that. When that happens, we will be there to help finance those mines on a go forward basis.
Bull market coming into this year?
Definitely. It's been, I think copper's actually hit a low, and gold is doing very well price wise. But, when you look at it, the fundamentals, there's still lots of capacity to push gold even higher.
Yeah. Randy Smallwood, I appreciate you and coming in today.
Pleasure. Yeah,
thank you. And thanks for tuning in to our viewers. Of course, we'll catch you next time. In the meantime, keep up to date with analysis from the Kitco app. It's my way of getting the news anyway, my favorite way. And also be sure to subscribe to our YouTube channel over at Kitco. Thank you very much. I'm Jeremy Szafron, and we'll see you next time.